Hey everyone, welcome to Leadership in the Dealership, the podcast where we dive into the latest trends shaping the automotive world with insights from today's thought leaders. I'm your host, Don Richards-Beff, and I'm super excited for our discussion today with Sharla Godbehere, who is the VP of Sales, Auto Lending with Equifax. Sharla, welcome to the show.
Thank you, Don. Glad to be here.
For those who aren't as familiar with Equifax, or might not know you as well as we do, could you give a quick intro on how you got started in the auto industry and then with Equifax?
Yeah, sure. So a little about me. So I am currently the VP of Sales for Auto Lending, as we mentioned. I've actually been with Equifax for over 25 years. I live in Scottsdale, Arizona, and have lived here for almost 30 years. Actually was born and raised, but then lived in California for a little while and came back.
Nice.
But really, in looking at, what I'm doing and how I got here, prior to this role, I joined this team about a year and a half ago. Prior to this, I was actually leading the fintech team that I founded in 2017. So we worked with Upstart actually as a fintech. I was very excited about that process. So it was really working with lenders and financial institutions to help consumers in a digital native environment with a consumer-friendly, frictionless environment. It was a lot of fun. Was asked to come over to lead the auto lending team because they had been very focused on the dealership partnerships and was looking for somebody with really a lending expertise. So joined the team last year, really having a lot of fun with it. I see a lot of synergies between what we were doing in fintech for many years and kind of where the auto industry wants to go. So that's a little about me. So if you don't know a little bit about Equifax, so Equifax is one of the three large credit bureaus. So traditionally we had credit data on consumers. We're actually over 100 years old. We started in Atlanta many years ago collecting credit insights. Yes. And since then, we've had a number of acquisitions, including some alternative data. We own the Work Number, which is the largest provider of employer and income the largest provider of income and employment data in an automated fashion. So we've really kind of expanded our suite of solutions over the last 25 plus years that I've been here. It's been a lot of fun.
Got it. And you said you had joined your current team about a year and a half ago. So when you think about what you're focusing on now, how your relationship with maybe Upstart and other lenders is structured, what does it look like? What is day in the life of the past year and a half for you and your team?
Sure. So we support all auto lending. So if you think of auto lending in three different buckets. So one is the captives. So these are the financial services arms of the OEMs. So think Toyota Financial Services. That's one section. Another section is the monoline lenders. So all they do is auto lending. A lot of those are focused more on the subprime lending. So you mentioned earlier, CAC is one, Global Lending Services is another, those types of environments. And then we also work with the financial services industry. So if you think of any bank or credit union that currently works in, they do multiple financial services, but auto lending is one of them. So Upstart in particular started as a strictly UPL, unsecured personal loan lender, and now you've moved into auto as well. So we support those lending arms as well in working with our FI teams to overlay as that SME support.
Got it. And before we get into the wild, wild world of buying vehicles, financing vehicles, so when we think about Equifax and services specifically for auto, if you had to say what lenders and OEMs and others are coming to you most for, what would that be? What are the services that that we're beating down the door to Equifax for?
Yeah, it's really a lot of data and technology. So if you think about the life cycle of a loan, and again, I work specifically in lending. So if you think about that life cycle, how do you identify the consumers that you're going to approve? Kind of that pre-model build data and analytics environment. Then how do you identify the consumers that you're marketing to? And then when you do get those consumers in front of you, how do you actually make a risk lending decision? So either leveraging credit data, income and employment information, any alternative data, and then throughout the life cycle. So you've got the consumer there, you've now funded the loan, now you've got to manage that loan, collect on it, go into recovery. So we really have different data and solutions and technology that can assist lenders throughout that life cycle of the loan.
Got it. All of the things that we're faced with every day. So
every day.
Well, thank
yes.
you for the intro. Now let's jump into basically the customer journey and the reason we're all here. What are some of the biggest shifts you've seen in the past year with consumers? The world is a crazy place right now, but we hear every day about the changes in auto finance rates, vehicle prices. But what are you seeing with consumers and their approach to car buying? What are some of those shifts? And then how do you see lenders and maybe even our customers' dealerships adapting to those changes?
Yeah, I think so there's really three pieces to that, right? How is the consumer changing, the lenders and the dealers? And I see the consumers changing a lot. They are far more educated these days about what they want to purchase. There's lots of options for them to research the vehicles, to get pre-qualified or pre-approved for a loan. They truly understand the buying process. They're not showing up at a dealer saying, show me what you got. They're showing up to the dealer saying, I want to test drive this vehicle. This is what I'm looking for. These are the features that I want. A lot of times they're showing up saying, I'm pre-qualified, I'm pre-approved, I've already got my loan, so I just need your help with the vehicle. But I think overall that's the key. Consumers have access to lots of pre-shopping tools that they can leverage. So from websites, they're going to more dealers now as well, looking at the different vehicles.
Right.
But really, if you look at consumers holistically, and I think a lot of that changed with COVID, they just became a lot more educated in the process and spent a lot more time sitting on their couch, getting that insights versus sitting in a dealership. And that's really what they prefer, right? Is really prefer to be, do their research in the comfort of their home, get everything lined up, limit the time that they're actually spending in a dealer. And then if you look at the dealership side of the package, I see them adapting to this, right? They're realizing you don't go to a dealer now. You used to go there and you had, multiple salespeople on top of you as soon as you got out of the car, right? Now they're a little bit more relaxed. They're kind of letting you walk around. They know that you probably have done some research. So you are seeing them adapt a lot more to that. But you're also seeing the dealers and lenders partner a lot more because it's really important that experience that the consumer is facing is consistent across the life cycle, right? So I'm on the website, I've identified the car that I want to buy. I now can work with my lender to actually get the financing. I need to know that my information is following me to the dealer and that when I get to the dealer, I have the same terms on that loan. That vehicle that I identified on the car is still available. So they're really looking for that omni-channel approach where no matter how they engage, that they are able to engage consistently across the process.
Yeah, I mean, that's the thing we're hearing a lot from dealers as well, that they recognize that consumers coming in more educated. They're also trying to make sure that there is that transparency, that price that you see quoted stays the same when you're online and then you come in store. And finally, whomever they're approving your financing with, that you still feel like you're getting a fair deal and transparent deal out of it. Like you said, that starts with that having access to more data up front.
And affordability is a big issue, right? Consumers want to know when they're shopping, what can I actually afford? Because here's my credit score, here's my income. Based on interest rates the way they are today, they need to know what they can afford ahead of time and not get in a situation where they are not able to make the payments on that loan. You don't want that. That's not a good situation for anybody.
Right. So, I mean, let's talk about that. The affordability concerns. As a consumer, you may be more educated, know exactly what vehicle you want. Maybe you have an idea of a lender, but we hear from customers repeatedly today that it's, whether the consumer knows what their credit score is coming in or not. Sometimes they're still they're quite concerned about what they're going to be able to afford, how they're going to pay for it, what type of financing they should choose. And we've got interest rates fluctuating. They're at all-time highs. Now we've got some reductions, vehicle price changes all over the place. Are used vehicles affordable? Are they not? What challenges, what opportunities are you seeing for lenders and dealers as they navigate the same rapidly changing landscape that consumers are being faced with? How do they make it easier for a consumer to understand what is affordable?
Right. And I think that really is connecting. The dealers and lenders need to work together, right? It's got to be a in sync process where the consumer knows what type of loans that they can get. And lenders today have access to more types of data than ever before. And the traditional credit file is changing. It's not the same file that it was a couple of years ago. You now have things like Credit Builder. You've got some self-reported data in there. You've got things that are not in your credit file, like your cell phone bill that could be more than your auto payment. So there's a lot of different pieces going into that lending decision now that weren't in play even 5-10 years ago. And lenders are really taking advantage of that data to help the process be more consistent and help those consumers who may know their quote score, but there's thousands of scores out there. What does that mean? So I know my FICO score. Well, what version of FICO is that? I know my Vantage score. What version is that? So it really is, the lenders are taking a much more proactive approach in working with the consumers to help them better understand their affordability. What can they qualify for? What are their options? The dealers are also helping them with that in looking at different lenders. So there are lenders who have different programs for different types of credit risk. So really kind of opening up those avenues to see where there's an opportunity to put that consumer in that right loan.
So I have a two-parter. We'll talk first about data analytics, personalization, and then there's a phrase that you've used I want to dive into. But first, how do you see data analytics and then using that massive amount of data that's available to lenders and personalization, reshaping the customer journey? Think about it from that first ad you might see online all the way to the showroom and then down to the finance office. How do lenders, how do dealers get access to more of that data and then use it to create a better customer experience?
Yes, I think that's a great question because there is really a lot of data out there and you can be a serious data junkie and want it all, but you've got to make it work into your ROI. But consumers are much more interested in personalized insights these days. They're going to be more open to opening a piece of mail or an email for something that they know, either a company that they know or in the auto lending space, say a vehicle that they know, right? You send them an ad that says, here's a Toyota. I drive a Toyota today. Let me open that. So there is so much options out there for understanding what consumers' interests are, kind of where they are in their life cycle, what their financial situation is, both within credit and outside of credit. So lots of options that you can really look at to personalize your direct mail campaigns, and then really how you're approaching those consumers as they come to the dealer and the lender. So that's really in the marketing standpoint. If you look at the risk standpoint, there's also a lot of that as well, right? We've talked about some of the alternative data that you can use. So underwriting a subprime loan has always been a little bit more challenging, but now that you have access to so much more data, you really can look at things from a more holistic picture than you were able to in the past. And if you think about where we sit today, just in the environment that we're in, we've got a lot of different types of consumers out there. We always talk about the Generation Z and the Gen X and kind of how they're a little bit different, especially when it comes to credit, may not have a lot of credit cards, may not have the ability to buy a house or buy a car. So pulling in some of the alternative data on those particular consumers as well to help that risk decision. But think about it on the other side. You've got the over 60s. A lot of those people in that generation, they've worked their entire life at one company. They've now retired nicely in their early 50s with a pension and medical, and they may only have one or two credit cards. They may not have a house. a mortgage payment because it's paid off. They may not have a car payment because it's paid off or they paid cash. How do you look at those consumers and how do you approach them a little bit differently than, say, a traditional credit consumer who's got a wealth of credit cards, a mortgage, and an auto? You always said you had to have a mortgage and an auto to make that work. So I think there's a lot of options to pull in that unique marketing data to understand lifestyle, where you sit today, as well as the risk data to understand what you can actually help those consumers with. But it really, and it's great because it can all be available like in one platform. I mean, there's technologies out there like Snowflake today that make access to data so much easier. We certainly have, lots of different sandboxes where you can pull all that data in and really understand the full picture of the consumer. It's no longer just the credit. You've got to look at income. You've got to look at investments. You've got to look at what their lifestyle stage is and what their appetite is for certain products. So lots of data. I think the key is really understanding what's going to work for you as a dealer or a lender, and then how do you make that ROI work so that you're not underwater with your purchases.
So you mentioned Gen Z, we've got Gen A coming up, Alpha coming up right after them. We talked thin credit files. Maybe you're not exactly in one of those groups, but you just don't have a mature credit file, as it were, right? Mm-hmm. And you've used phrases like in the past, you had an article, you said nuanced credit risk assessment. So when we think about Equifax and services in what you've observed for these newer consumers, the ones who are maybe at times need credit the most, but we have the least amount of information available, as opposed to maybe the older. I've got significant investments, but maybe not an active job history, a different type of file. How do you look at building certainty for lenders, for dealers around those thin credit file customers with less information? Where is the industry trending to kind of reduce risk there? How do we figure that out?
And there's been a lot of progress in that space in the last couple of years. The fintech community particularly has really helped advance that. Equifax, personally, we have a database that has cell phone data in it, telco utility information in there. So how do you pay your cell phone? If you think about a mini credit bureau for that particularly in that particular industry, and really looking at those types of payments. Most people who come, even new people coming to the country or young adults, have cell phones. Sometimes they might be under their parents' accounts, but they have cell phones. So that information is available. I know getting access to bank transaction data and looking at cash flow insights. A lot of that's consumer permissioned here in the US. Other countries, not necessarily, that there's more open banking related to that. But being able to get access to insights into how consumers are managing their income and what their expenses look like, that's important, especially as we've seen a rise in buy now, pay later. A lot of that's not showing up on credit files. So the only way you're really going to see those transactions is looking at bank transaction data. You're also talking, if you're new to country, there's companies out there that can pull in your credit file from a different country and leverage that here in the United States so you can get some of that insights. Because it's not just the young people, it's also people that are new to country that could be here working, making six figures, but yet they don't have any credit established. So how do you look at them? Of course, income and employment, we talked about the work number database. That's got a wealth of information. Not only looking at where are you employed now, a lot of lenders today in the auto space use that to clear STIPs, but there's something else around the risk perspective of that. If you've been in the same job for a number of years or the same field, you're a little bit less risky than somebody who's constantly moving jobs. So even if you're not currently actively employed on the work number, which doesn't mean you don't have a job, but it's just not one that's reporting in that database. But looking at that stability as part of your risk assessment is another way to capture additional information. So I feel like we're in a position today where lenders and dealers have more access to information than ever before. It's really is just a matter of being able to capture that information at the right time to make the right decisions.
Got it. As we look towards the buying journey for customers becoming more digital, frankly, entirely digital. We've seen fraud start to increase in new, fascinating ways. I've heard stories from dealers where maybe you walk into a dealership, you hand them an ID, everything on that ID is valid, but maybe the image is yours, right? And it passes a fraud check and then someone walks away. So fraud, when we talk to dealers outside of things like credit worthiness and affordability, we hear fraud popping up as well as just it's the hot topic. What can you do to help me with things like synthetic identities, right? So it sounds like that's hard to solve for the average dealership. What are you observing that, whether it's Equifax or just industry wide, that can be implemented at the lender level, at the dealer level, that starts to maybe, I guess the first is understand that there is a problem, detect the problem, and then prevent the problem. So what kind of effective fraud fighting techniques are you seeing on the Equifax side?
There's a lot of options on fraud. And I do see that industry, that challenge growing a lot in the auto space. I feel like it used to be the finger pointing that the lenders would say the dealers were supposed to check for fraud, and the dealers would say the lenders check for fraud, and the lenders say, well, if it's fraudulent, I'm going to charge it back to the dealer, and the lenders say, well, I price for it, so I'm not worried about the fraud as much. But we definitely see it growing a lot. In fact, I've read that it's expected to reach $8 billion in this industry for this year. So huge problem, industry ecosystem problem. And I've also heard lenders talk about using 5 to 8 different fraud providers, which is a lot. That's a lot of data. But there definitely are, easy things that you could implement pretty quickly throughout the life cycle. Could reduce that fraud quite a bit, make that a lot easier. As simple as checking the phone number or the email address. Is that phone number and email legit? Is it something that's been actively used? Has it been around for a long time? Is it new? Completely outside of credit, right? That's a really easy check, very inexpensive, something that really should be done very early in the process. One thing that we saw a lot of is as lenders and dealers were bringing out pre-qual, so a soft inquiry for consumers shopping on the website, many of them said, we don't need fraud. They're going to go to the dealer. We're going to verify information at the dealer. Well, little did they know, they were quickly identified by the fraudsters as being a free service to validate the identities they had purchased. And while that consumer actually never made it to the dealer to purchase a loan, or to purchase a vehicle, they actually did incur a lot of data costs to validate those identities for those fraudsters. So having a really quick, easy check up front, just email and phone number. That's all it has to be. You can validate that to make sure it's real. That's key. There certainly is a number of solutions along the way. And I believe at one point in time, it was over 50 different fintech providers for providing fraud solutions, regardless of what you want. So if you think about fraud, there's really synthetic ID, totally fake identities that were created. The bureaus, Equifax definitely has an option there. Many people ask me, well, why do you even allow that synthetic ID on the file? It's a regulatory thing, right? If it's reported to us, we need to actually bring it to the file. But we see things that you don't normally see, so we can identify that those may be potential synthetic identities. For example, if you have a file that somebody has basically sold authorized user access to their credit cards, so you can create an entire file off of authorized users. We've seen situations where you've got entire files with self-reported or credit builder type of accounts. You see 85% first pay default on those, right? So big problem with that. Definitely a lot of solutions there. We're seeing more and more situations where fraudsters are taking advantage of those consumer rights, like credit washing. So being able to dispute trades on your file, consumer or fraudsters or consumers who just really have no intent to ever pay are taking advantage of some of that to try and remove that trade from a file for a short period of time. And then it gets put back in there, and then they're never paying. So now what do you do with that particular transaction? But I really think it's an ecosystem problem that we all need to work together to solve, and not constantly, this is this person's problem, this is this person's problem. There's really easy tools and solutions that you can implement along the way to help identify the fraud, complete your KYC, and really reduce that problem overall, because it's going to continue to get worse if we don't stop it.
I think fraud feels a lot like, and maybe just closely and tangentially related to compliance, right? Same area where you're sitting there going, well, it's the lender, now it's the dealer, or as we move fully online, is it the OEM direct to consumer? And there's compliance there as well. And everybody maybe traditionally does this. And now I think we're all moving towards, I'm not sure what you're doing, but I'm going to cover it all myself. And then we're saying, I'm going to cover it all myself. We're probably going to get to a place where we're great at compliance and great at fraud because everybody's trying to race to being fully reliant. But I agree, it's that cooperation that's going to move us much further. Being transparent with each other about what problems we're experiencing, what new things we're identifying, and just sharing information with each other to prevent that. Some of the stories I hear are just mind-boggling, and I'm like, I can't believe as a business that you're having to deal with that, because we think on the lending side about just digital fraud, but even internally we hear stories, right? Something happened out in the real world where someone was trying to defraud an older borrower or something like that, or at a dealership someone walks away with a $150,000 car, and it's like we've got to put as much in place to stop the problem soon, or it gets out of hand. So appreciate the background on that one. What are some of the strategies? Think about this as we implement more strategies to prevent fraud or to be more compliant. You run the risk of making a transaction feel difficult, harder. You're trying to increase trust with a customer. Some of the things I've seen are maybe hesitation from a dealer. It certainly could be on the lender side as well, of things are always done this way, we have to continue to do them this way, or they implement a new process and it actually makes it worse for the consumer. Do you have thoughts on how we increase trust and transparency with the consumer while edging towards lower fraud and more compliant solutions?
Yes, I think that consumers are looking for change, especially in the auto space. They're busy, right? The average family has soccer and dance recitals on the weekends. They don't want to spend their day in the dealership. That's not their goal. So they're looking for us to find ways to make it easier. And I think they're very open to seeing that. I truly believe financial services as a whole has led the charge with helping consumers understand they can do a lot more digitally. And Amazon has certainly spoiled us all with 2-day delivery and personalized ads. So consumers are expecting it. And I do see where, yes, you can, to prevent fraud and ensure KYC and e-compliance, you can create a lot of friction. But there are also ways you can do it without creating friction. You should really be adding friction when there's suspicion, not as a standard protocol. I am also a big fan of what I call putting fresh eyes on processes all the time, especially when it comes to lending and dealers really looking at the process and saying, okay, why are we doing it this way? And if the answer is because that's the way we've always done it, maybe we need to reevaluate it.
Yes.
And I know that 21 and 22 were really challenging years for lenders. If you talk to them, they'll tell you that was their worst vintages ever. They're still hoping those things just write off quickly because they originated so much bad debt during that time frame. And a lot of them, to reduce that bad debt moving forward or reduce the fraud losses, really threw a bunch of solutions at it. And now is a good time to take a step back and look at the process and saying, what are we doing? Where are we doing it? And why are we doing it? And ask that question. And if it's like, it's not working, it's not giving me the insights that I was hoping for, reevaluate what you're doing. And especially if it's creating friction with a consumer, because that's really when you're going to have them walk away. But there are more and more solutions and ideas and just best practices and strategies, things like this podcast. I was at Used Car Week this week. There's lots of ways that you can get a lot more insights into what's going on, what's available to you. Staying on top of that is really important to know what's available as far as creating that more frictionless environment for consumers while still reducing fraud and meeting compliance and reducing risk. It's possible. It's just really understanding where we're evolving as an industry.
Feels like maybe take a break and put the consumer first again, right? Is evaluate how are we actually serving the customer as opposed to maybe serving our own internal policies or fear of risk, right? Is that we can probably reduce friction and stay compliant and actually be more compliant and less fraud. Yeah, it'd be interesting to reevaluate everyone at the end of the year. So let's think about that. We're coming to the end of yet another year. Somehow we end up this time of year and say, how did we get here? It happened so quickly. So as we look forward to auto financing over the next couple of years, was there any emerging trend, any technology that you think is going to have an impact, whether that's big or iterative?
Yes. I wish I could say it's something major that I see coming. I do think it's more of baby steps kind of moving forward. I think your dealers will always be in the picture. You will never see dealers go away. You'll never see bank branches go away. They'll always be around. But maybe how they play a role in the whole process may change a little bit over time. And that is going to require that the lender-dealer relationship is even closer, that they really are working together to provide that omni-channel environment so that consumers have very consistent insights that they're getting along the process, right? They're getting the same information from the dealer that they are from the website. That's going to be very important. I think you're going to continue to see even more emphasis on less traditional data. The credit bureau is going to always be part of the process, just like the dealer. It's never going to go away. But there's so many other options out there now to solve for risk, to solve for fraud and compliance. So you're going to continue to see that grow. And you're going to see the environment need to really kind of hone in on what kind of data and solutions they're using for making these decisions and really making sure that their ROI is there. So doing recaps and looking backwards to say, why did we do what we did here? And making more adjustments moving forward and doing that more on a timely basis. If you look at lending traditionally, a lot of lenders who build custom models, they only update those like every couple of years. That's not going to be acceptable moving forward. You're going to have to update those much more quickly and have that compliance on top of it so that you're knowing why you're making those updates. But it's going to be really important that you're looking backwards to say, why did I do what I did? And how can I change things moving forward? And constantly being in that cycle to do that.
Cool. Well, we're coming to the end of another episode of Leadership in the Dealership podcast. And as I mentioned, we're at the end of yet another year. Time flies, even when it's like, how did we get here? You think back to 2020 and, oh my gosh, 4 years have gone by. Do you want to leave us with potentially any bold prediction as we look into 2025? Do you have anything that you think is going to happen if you had to bet against something or bet for something next year?
Is it what I think or what I would hope happens? So I hope interest rates go down.
Either way. Hopefully interest rates continue to go down for sure.
Go down. I hope the ecosystem works together to solve our problem with fraud. Those are really kind of two things. And I hope that consumers are enabled to live their financial best. Those are kind of I don't know if they're predictions, but there would be my goal for next year.
Well, thank you, Sharla, for sharing your time and valuable insights with us and our audience today. What's the best way for people to contact you outside of this show?
LinkedIn. I'm very active on LinkedIn. That's probably
Okay.
the easiest way. Just go ahead and send me a note on LinkedIn. I'm very responsive and getting back to you.
Awesome. Well, thanks again for joining us today, and thanks to our audience for watching.
Thank you.